All right, guys. So with crypto right now, this is the time to be very specific and very precise and almost scientific with your investing if you're trying to dollar cost average right now, right? Markets are literally in a free fall, right? And for many, they are staying clear of the market. There are people who are dollar cost averaging in the market, right? And there are people who are trading this market, right? So, you know, how do you play this is you got to decide which three of those you are, right? If you're the dollar cost averager, then it's very important that you dollar cost average in the most strategic way possible to reduce risk. So what I mean by that is take an example of dollar cost averaging at given price points, right? So if you got $1,000, because you're an investor, right? You're not a trader. You're an investor, and you're not necessarily concerned about catching the bottom. That should be number one. You're not necessarily concerned about catching the bottom, right? Right. So you can use price points for Bitcoin. So Bitcoin is trading at around what 21,000 right now. At the time of me writing this voice note, right? So you could use price points. If you had $1,000 you want to put into Bitcoin, put in 50 at 21,000, right? If Bitcoin dumps to 20,500, put in another $50, right? If it dumps to 20K, put in another $50. If you see it dump to 17K, put in $100, right? If it goes to 16K, put in another $100, right? Or you could just keep the same strategy. Just keep putting in $50, $50, $50, $50, right? That's one strategy, okay? So another strategy is every day, regardless of the price, you're buying $50 worth of Bitcoin, right? So, $50 every day with $1,000, that would be what, 20 days of Bitcoin buying. So you'd be buying Bitcoin over the time span of 20 days, for example. And you can use the same approach with any crypto asset or even stock as well, right? Well, stocks are a little different because unless you're buying micro shares, you need to buy the whole share. Okay, so there's some different variables there, right? So right now, there's a lot of uncertainty in the market. The fear level is at a 6, right? I don't know when the last time we saw a 6 on the fear and greed index is. It's been a while, right? So a lot of people are really, really bearish. And I'm starting to see that there's overwhelmingly bearish sentiment in the crypto market right now. So everybody's calling for lower price target, lower price target, lower price target, right? So what does this remind you of? Do the inverse of now. Everybody's calling for lower price targets, lower price targets. It feels like the opposite of it. Just flip that, right? It feels like we're in a bull market, but it's the bear market, right? So the sentiment is just as strong. We're just in a bear market, right? So what tends to happen, right? What tends to happen is that price points that a lot of people start calling out, they don't get hit, right? Or they get hit, but it takes much longer than people think to play out, all right? So I don't think Bitcoin has bottomed yet, but I'm keeping in mind what's going on with the sentiment in the overall crypto market, as well as the charts, okay? Because that's gonna show me or show us or indicate where Bitcoin is going much faster than the macroeconomic situations, right? So if you're just trying to play the news and what the Fed said and all this stuff, sometimes you'll miss out, right? Both ways. You can miss out both ways because that's That information is like lagging indicator information, right? And so we know that the Feds are basically they're doing QT, quantitative tightening. So they still have to take out like, what was it, like 1.5, a little over 2 trillion. They still have to take out $2 trillion from the legacy markets, right? So they blew up the balloon, and now they got to deflate the balloon to get inflation under control, right? So we know that that's still on the horizon, and we know that that's still in progress, right? It's not done. Inflation is still bad, right? So the Fed said that they would never do 75 basis points rate hikes on the interest rates, right? But they did it last week, right? And so I think that the Feds don't want the markets to have any type of certainty, okay? It's like a reverse psychology type thing, right? So when the stocks and when the indices, when the stock market has certainty, now crypto too, in a way, right? So crypto has other variables as well, right? That cause it to be very volatile, right? When the markets have certainty, then the markets can bake all of the bad news in or the good news in, right? And we can have a bull market, or stocks can be more bullish, right? They can be going up more in an upwards direction versus a downwards direction, right? That's certainty. Markets like certainty, right? So that's one thing that I'm very big on, when even though I'm more big on crypto than I am stocks. What is the certainty factor? Are these certain times, or are these uncertain times? Okay. These are uncertain times right now. In the COVID crash, that was an uncertain time, right? Then the Fed said, hey, we're going to print money like there's no tomorrow. That was certain. Those were certain times. Market flipped bullish. We went on a 1.5 year, 2 year bull market, literally, right? I'd say what was it, like 18 months, roundabout. It was in March 2020, going into 2021, November, right? Yeah, so around 18 months. Certain times, right? Give or take some months, okay? Now we're in uncertain times, okay? So with that being said, many think that there's much more downside to go in the S&P, and especially in Bitcoin. So stocks and crypto right now is the perfect storm and the perfect recipe for more downside action with crypto. So with that being said, there are a lot of people who are just waiting on the sidelines, sitting on their hands, waiting for the news, right? You know, each one of us as investors, not traders, right? Investors have to really decide how we're going to play this, because we will get through this. We will get through this. And when you look back at this time, you will ask yourself, what did you do? What did I do? Did I wait for Cadena to get to 50 cents, right? And it never got to 50 cents, so I didn't buy any, right? Right? Did we wait for LCX to get to 2 cents and it never got to 2 cents and I didn't buy any, right? You know, I use these as examples, right? Did we wait for Bitcoin to get to 13,000 and it never got there? Or maybe it will, right? Just don't know. So that's why dollar cost averaging is very good, a very good strategy, right? Because when you're dollar cost averaging, you're not focusing on trying to time the bottom. If you try to time the bottom, it'll drive you crazy. And more than likely, you won't succeed, right? So the odds are against you. But if you were to use precise and strategic dollar cost averaging, then you can at least catch the move. You're catching the move as it goes down, right? Or as it trades sideways, because the dollar cost averager, their mindset is long term, right? So if, for example, the dollar cost averager, in my mind, should be looking to hold whatever asset they're buying or investing in for, anywhere from 3 years and up, I would say 5 years really, but 3 years and up. If you sell an asset um, within 12 months, you're essentially a trader, right? You're a trader, right? Like that's your mentality. Oh man, it went up 10x. I'm out. You're a trader, right? Or you could put a different term on that and say I'm a short-term investor or a swing trader, whatever, right? But you're a trader, right? Because you didn't plan to hold the asset for like, 3 to 5 to 10 years, right? There's nothing wrong with that. You know, in crypto, it sucks when you don't take profits, right? You got to figure out what side of the fence you rather be on. Would you rather be on the side of the fence of where people say, "Oh man, I sold too early," or the other side of the fence where those people say, "Damn, I should have sold that shit. Now I'm down," right? You got to figure out which of those people you want to be. Or you're the other person who's at the coffee shop who says, "Yeah, yeah, I know it went up and it went down. So I just bought more because my time horizon, right? My time horizon is 5 to 10 years, right? So for me, for example, I have way more alts than I do Bitcoin. But my Bitcoin is that's like generational money. That's like money I'll pass to my kids at some point, right? So that in 10 to 15 to 20 years from now, my kids aren't looking at me like, Dad, you don't have any Bitcoin? You didn't buy any, right? And that's a common mistake with a lot of people who are new to crypto, right? They'll say, I'm not buying Bitcoin. I'm not buying Ethereum. It's too expensive. Let me try to get one of these altcoins because it can go up 100x. And they're right. There is the potential there, right? But there's also the potential that won't happen, right? Right. So, I don't want to be one of those parents who was able to buy an Ethereum at, 1,000 bucks or a Solana at 30 bucks, right? And I never bought any. Right? So that's why I say have some big players in your portfolio. Now, when we start talking about stocks, when it comes to companies, not the ETFs and the index funds and stuff like that, but when it comes to companies, sometimes the money is staring you right in the face. I had a talk with many people about stocks back in the COVID crash about Tesla, and they were just getting into stocks. And I said, look, do some research on Tesla, develop your own thesis, decide whether or not you want to get into Tesla, right? You got index funds, right? You got ETFs, but the allocation in your portfolio that's allocated to investing in direct companies, you're looking for solid companies that still have growth ahead of them, right? So sometimes the money's staring you right in the face. Tesla's not going anywhere, in my opinion, anytime soon, right? Apple, right? Disney, right? AMD, right? Sometimes it's staring you right in the face. Once you start doing your research, the money is there to be made. It's just you pulling the trigger, right? You know, it's not very complicated when you really look at it, right? If you know Ethereum was just trading at almost 5,000 bucks, it's trading at 1,000 bucks now. Well, almost 1,200 at the time of this voice note, right? Since the dip, which a few days ago you could have got it at 980, right? More than likely, Ethereum will get back to that all-time high. Don't know when that will be, but that's a 5x. You have the opportunity to turn $1 into $5, and that's a crypto that's similar to Bitcoin that you don't have to worry about for a long time. I don't think anybody's coming to take Ethereum spot anytime soon. Could be wrong. I've seen stranger things happen in crypto, right? So sometimes you just want to put some money in the winners. Have some winners, have some established winners in your portfolio. Okay? Right? And if you say, yeah, well, I don't want to lock up a lot of money in those winners because they already have a 20 billion, 5 billion, whatever $1 billion market cap. Okay, nobody said you had to put all your money into those assets, right? Strategically, you could take the stance of, well, you know what? I know Solana was at 250. It's at $30 right now. Let me put in this much. And my Solana, I'm not gonna touch. So an asset like that, Ethereum, Bitcoin, Solana, that you don't plan on ever selling, the money you should put in there should be money that you plan on never selling, right? So it's not like all your money, because maybe you want to put, you know, 30% of your portfolio into those long-term plays, and then the 70% into other cryptos that still have growth, right? They're under $1 billion market cap or under $500 million market cap. Okay. So these are strategies and plans and different ways to interact with or invest into crypto. You can use the same methodology, same approach with stocks. All right. But you want to have a plan. Have a plan. Don't just throw money into these cryptos and these stocks, because you'll get burned. You will totally get burned. You'll get wrecked. And it doesn't feel good. That side of the fence, it doesn't feel good when you get wrecked. So definitely have a plan. You know, I would just take a minute, take a step back, and just breathe and just have a plan. Don't rush into anything, but have a plan before you click the buy button. Always have a plan. And also, this goes on the flip side too. When you're investing in those growth cryptos that are still $500 million market cap, right? Let's just say, you invest into Cadena or A0 or Glitch or whatever crypto, right? Or Paribus, right? And let's just say within the next 6 months or a year, it 10 or 20x's. What are you going to do? What are you going to do? If you didn't have a plan for that day, when that day happens, or when that day comes, you're going to be in panic mode. You're not going to know what to do. You're not going to know what. I'm telling you, I've had a lot of conversations with people who didn't know what to do when they had a crazy run up. Don't be one of those people who goes straight into panic mode when one of your assets goes parabolic. All right. That's why I say have a plan. Have a plan, and sitting on your hands, waiting for the coast to clear. You got to decide if that's for you as well. All right. Maybe you want to get a little piece of the action while things were super bloody, right? Because as we know, especially in crypto, things can go from super bloody to super green really quickly. All right, guys. Like I say, have a plan. Have a plan and you'll be fine. Don't overcomplicate it. Just have a plan. All right. There's a lot of good opportunities out there right now, but it's up to us as the investors, not the traders, because traders don't care what the asset is. They're looking at TA, right? So as investors, it's up to us to weed out the noise and weed out the garbage. All right. Have a plan and we will get through this. This is going to pass. All right.